Welcome back to the Daily Crypto Deep Dive. Today we are asking one of the biggest questions in the market right now. Did AI kill the crypto bull run? Because for months, people have been saying the same thing. Money has rotated out of crypto and into artificial intelligence. But that can sound like a lazy excuse. It can sound like one of those phrases analysts throw around when Bitcoin is down, altcoins are bleeding, and nobody really knows what to say. So today, we are going to do it properly. We are not just going to say AI stocks are doing well. We are going to ask, which AI stocks? How much have they actually gone up? How much money, in market value terms, has been created? And then the big one. If even a chunk of that value had gone into crypto instead, where could Bitcoin and the wider market be today? And straight away, the answer is pretty wild. Before we get into it, a quick reminder. This show is supported by Kraken. If you are trading crypto and want to support the show, the Kraken link is in the description. We are also giving away 20 XRP to one listener who signs up through that link. As always, this is not financial advice. Crypto is risky, stocks are risky, and you should always do your own research. But if you already trade crypto and want to support the show, we genuinely appreciate it. Now let's start with the claim. The claim is simple. Crypto has struggled because money has gone into AI instead. And looking at the market, that claim is not just made up. CoinDesk has reported that crypto has been under pressure while investors have favored artificial intelligence-linked stocks. Bitcoin has been fighting around the $60,000 level. Ethereum has been weak. XRP, Dogecoin, and Hyperliquid's hype have all taken bigger hits. And the market has been dealing with spot Bitcoin ETF outflows, a hawkish Federal Reserve, and a stronger dollar. But the key part is this. Risk appetite has not disappeared. People are not hiding under the bed with cash. They are still taking risk. They are just taking it somewhere else. And that somewhere else has been AI. But when we say AI stocks, we need to be specific because this is not just one company. Most people immediately think of NVIDIA, and obviously NVIDIA is still the king of the AI trade. NVIDIA makes the GPUs that power the AI boom. It sells the chips, the systems, the networking, and the full stack that companies need to train and run large AI models. But here is the interesting thing. NVIDIA is not even the biggest percentage winner in the chip market this year. MarketWatch reported that NVIDIA was actually one of the weaker performers inside the semiconductor index on a year-to-date basis, with the stock up around 14%. But because NVIDIA is so massive, that still matters. At a market cap of nearly $4.7 trillion, a 14% move is not small. That is roughly $577 billion of market value added. Just think about that for a second. One underperforming AI giant has added more than $500 billion in value this year. That alone is bigger than the market cap of almost every crypto asset outside Bitcoin. It is bigger than Ethereum's market cap. It is bigger than XRP, Solana, Dogecoin, and most of the altcoin market combined. Then you have Broadcom. Broadcom is not as flashy as NVIDIA, but it is absolutely part of the AI machine. It is involved in networking, custom chips, and infrastructure that helps data centers move massive amounts of information. Broadcom has been up around 15% this year. With a market cap around $1.7 trillion to $1.8 trillion, that works out at roughly $230 billion of market value added. Again, that is one company. Then we get to where the AI trade has become really explosive. Memory chips. This is where Micron comes in. Micron makes memory, and AI needs insane amounts of memory. High bandwidth memory has become one of the most important bottlenecks in the whole AI supply chain. If you want huge AI data centers, you need chips, but you also need memory. You need the picks and shovels behind the picks and shovels. Reuters reported that Micron had gained more than 260% year to date, and other market data has shown even higher figures. Using the more conservative number, Micron has added roughly $936 billion of market value. If you use the higher 300% plus figure, it is close to $1 trillion. So now we are not talking about hype. We are talking about real, measurable value creation in public markets. Micron alone has added something like nearly half of the entire crypto market cap and value this year. Then you have AMD. AMD is the challenger to NVIDIA in AI accelerators and data center chips. It is not the leader, but it is absolutely part of the AI arms race. AMD has been reported up around 158% year-to-date. Based on its current valuation, that is roughly $527 billion of market value added. So NVIDIA adds around $577 billion. Micron adds over $900 billion. AMD adds over $500 billion. Broadcom adds over $200 billion. And we still are not done. Intel has had a massive comeback story. Whether you believe the full turnaround or not, the market has priced in hope around chip manufacturing, foundry work, government support, and future AI production. Intel has been reported up around 282% year-to-date. Based on its current market cap, that is roughly $482 billion of extra market value. Then there is ARM. ARM is different. It does not manufacture chips in the same way. It designs the architecture that powers huge parts of the chip world. Smartphones, servers, data centers, custom processors. ARM is everywhere. As AI spreads from cloud data centers into devices, servers, and edge computing, ARM becomes a key part of that story. ARM has been reported up around 270% this year, which works out to roughly $256 billion of market value added. Then we have Marvell. Marvell is another one people often miss. It is involved in AI networking and custom silicon. In simple terms, AI data centers do not just need clever chips. They need everything connected at ridiculous speed. Marvell has been reported up around 218% this year, which works out at roughly $163 billion of market value added. Now add just those names together. NVIDIA, Broadcom, Micron, AMD, Intel, ARM, and Marvell. You are looking at roughly $3.1 trillion of market value created this year. That is the size of the issue. Because the entire crypto market today is only around $2.16 trillion. Bitcoin is around $1.21 trillion. So when people say money has gone into AI instead of crypto, the numbers back up the idea that AI has been the dominant risk trade. It does not mean every dollar came directly out of Bitcoin and went straight into Micron. That is not how markets work. But it does mean the attention, the liquidity, the excitement, the institutional flows, and the big valuation expansion have been happening somewhere else. And crypto has been left outside the party. Now let's do the big what if. What if that $3.1 trillion of market value had gone into crypto instead? Again, this is not exact. Market cap is not the same thing as cash. If $1 billion goes into Bitcoin, the market cap does not always rise by exactly $1 billion. Sometimes it rises more because markets are thin. Sometimes it rises less because sellers appear. But for a simple comparison, let's use market cap. The entire crypto market is around $2.16 trillion. Add $3.1 trillion to that, and you get roughly $5.3 trillion. That would put the crypto market at more than double today's level. It would put crypto above the highs from the last cycle. It would completely change the mood. Instead of people asking if Bitcoin is going back to $50,000, people would probably be asking if Bitcoin is heading to $150,000, $200,000, or higher. Now let's look at Bitcoin alone. Bitcoin's market cap is around $1.21 trillion. If you added $3.1 trillion to Bitcoin's market cap, you would be looking at a total Bitcoin valuation of roughly $4.3 trillion. With the same simple market cap maths, that would put Bitcoin somewhere around $215,000 to $220,000. The AI boom has not just taken a little bit of attention from crypto. It has absorbed enough market value to theoretically send the entire crypto market into a completely different universe. And that helps explain why this cycle feels so strange. In past crypto cycles, when risk appetite came back, crypto was one of the first places people ran. Bitcoin, Ethereum, altcoins, meme coins, DeFi, NFTs. Everything got dragged up because crypto was the exciting high beta trade. But this time, there is a competing story. AI has become the new high beta trade. If you are a fund manager and you need growth exposure, what is easier to explain to your clients right now? Buying a basket of AI infrastructure companies that are posting massive demand from data centers, or buying altcoins that are down 50%, 60%, 70%, and still struggling to explain real adoption? That is the problem crypto has right now. It is not just fighting the Federal Reserve. It is not just fighting ETF outflows. It is not just fighting a stronger dollar. It is fighting for attention. And attention is everything in speculative markets. But here is where the story gets more interesting, because this does not necessarily mean crypto is dead. In fact, it might mean the opposite. The AI trade is now very crowded. When Micron is up hundreds of percent, when Intel is up hundreds of percent, when ARM is up hundreds of percent, when NVIDIA is worth nearly $5 trillion, investors eventually start asking, how much good news is already priced in? That does not mean AI has to crash tomorrow. It does not mean these companies are bad. Some of them are incredible businesses. But it does mean the easy money may already have been made in parts of that trade. And when one trade becomes overcrowded, money eventually starts looking for the next under-owned opportunity. That is where crypto could come back in. Because crypto is the opposite right now. Sentiment is weak. Bitcoin has been under pressure. Ethereum has been hammered. XRP is still struggling. Dogecoin is down. Hype is down. Retail interest is low. People are bored. People are frustrated. People are asking if the cycle is over. That is normally not when the hype phase begins. That is normally when serious investors start watching. And the big question is whether crypto can give the market a reason to rotate back. For Bitcoin, the reason would probably be macro. If the Federal Reserve softens, if ETF outflows slow down, if the dollar weakens, Bitcoin could suddenly look attractive again. For Ethereum, the reason needs to be usage, scaling, and fees turning into value. For XRP, the reason would be institutional adoption, payments, ETFs, or real regulatory clarity. For Solana, it would be retail activity, applications, stablecoins, tokenization, and continued developer momentum. And for AI-linked crypto, this could be the bridge between both worlds. Because if AI is where the attention is, crypto projects that genuinely connect with AI infrastructure, decentralized compute, data, identity, payments, or agents could eventually benefit. But the word genuinely matters. Slapping AI on a token name is not enough. The market is more mature now. People want real use cases. So, did AI kill the crypto bull run? My verdict is this: AI did not kill crypto. But it absolutely stole the spotlight. The money did not disappear. The risk appetite did not disappear. The dream of the future did not disappear. It just moved. It moved into NVIDIA. It moved into Micron. It moved into AMD. It moved into ARM. It moved into Marvel. It moved into Broadcom. It moved into data centers, memory chips, networking, servers, and the companies building the physical infrastructure behind artificial intelligence. And while that was happening, crypto was left fighting ETF outflows, weak sentiment, macro pressure, and a market that suddenly had a shinier toy to chase. But markets rotate. They always do. The real opportunity now is watching for the moment when AI becomes too crowded and crypto becomes too ignored. Because if even a fraction of the money that has gone into AI starts looking back at Bitcoin, Ethereum, XRP, Solana, and the wider crypto market, the move could be violent. That does not mean you chase blindly. It does not mean every altcoin survives. It does not mean the bottom is definitely in. But it does mean this: the capital is out there. The market has already proved it is willing to pay trillions for a future technology story. Crypto's job now is to convince investors that it is still one of those future technology stories. And if it can do that, then this brutal period might not be the end of the crypto bull run. It might just be the pause before the money rotates again. As always, this is not financial advice. Do your own research, manage your risk, and never invest money you cannot afford to lose. And if you want to support the show, check out the Kraken link in the description. We are giving away 20 XRP to listeners who sign up through that link, and every bit of support helps us keep producing these daily episodes. Thanks for listening, enjoy the rest of your day, and we will see you at the top.